So when I planned out this video, my original thought was I was going to talk about Airtable API or maybe also go into their new Airtable pricing. But unfortunately, last week Airtable made a sad announcement that they have chosen to lay off yet another round of employees.
Oh my God. Oh my God.
What about us, Michael? Do we still have jobs?
I don't know. Probably not.
I am talking about a 27% staff reduction as of September 2023. If learning more about this latest announcement is of interest to you, stick around and let's get into it. Hey, welcome back to the channel here at Gap Consulting, where we talk about all things no code. I'm your host, Gareth, and in this video, we're going to be talking about the recent Airtable layoffs. Before I hop into the heart of things, though, I first want to invite you to join me for our Airtable Crash Course. If you are an Airtable user and you want to get the most out of Airtable, check out our Crash Course because it will teach you the core fundamentals of the tool. You can grab that at gapconsulting.io/Airtable-crash-course. But now for the heart of the video, let's hop on into it. The big announcement that came out just the other day, I'm talking September 2023, is that Airtable has chosen to go through a second round of layoffs. This is following their first round of layoffs that was back in October of 2022. So let's go ahead and hop on into my screen. We're going to take a look at this Forbes article here. This is Airtable here announcing 237 people getting laid off, or 27% of the company. Remember that their last valuation that was made public was at $11.7 billion, and this was at the height of the pandemic when money was flowing and the tech sector was booming. So we're going to talk a little bit about where we might hypothesize they are currently. And I want to stress before we go into any more of this that this is not a financial channel. This is not financial advice. We are simply doing a little bit of speculating here, trying to get a better understanding of where things might be inside of Airtable's financials. Because they are a privately held company, none of this is really known, so it is pure speculation. Let's go ahead and hop into it. So here we go. Remember again, the cuts that happened back at the end of 2022 laid off 254 people. So if we're following what's been happening, previously during the boom here, Airtable had about 1,200 people. They reduced to about 1,000, reduced again now to about 750. So it's been a substantial depletion of staff over the last year and a half. Pretty substantial considering the size of the company. So taking a look at what Howie's reported here, Howie being the CEO of Airtable, he was quoted here as saying, "The market has tipped towards favoring efficient growth over growth at all costs. And we must operate the business in a more mature way that puts us on a path to become a public company and to have durability and efficiency in how we grow." I want to highlight the fact that he is calling out becoming a public company. So it is no surprise to me that Howie has his eyes on becoming a public company and potentially IPOing at some point in the future. However, we have to be conscious of the current economic environment, and that's why we're going to be taking a look at some comparisons here in just a moment. But it's nice to know that Airtable has their eye on becoming a public company. It would, in my opinion, serve us better as consumers if Airtable were to IPO as opposed to getting acquired. Because if they were to get gobbled up by a much larger company, there's really no telling what might happen to them. But if they do keep their eye on the initial public offering, going public, well then I think it serves us better as consumers that Airtable will be a stronger force moving forward in the future. So fingers crossed that this isn't just lip service and that this is actually Airtable's goal, that they will at one point in the future go to IPO. Of course, that is not going to be today because of the fact that the market is in such dire straits as compared to the height of the pandemic when Airtable did its last round of funding. But reading on further into this article, Howie says, "I let myself get caught up in the hyper-competitive environment at the time. We had the capital, they had just gone through a round of funding, and said, hey, let's hyper scale, let's recruit as many smart people as we can and just throw them into the business and see what they can do. This is something that we saw a lot of in the tech world, especially during the pandemic when money seemed to be just printed for free. And so it's not too surprising. Although the other part of it is I would kind of wish that they would have done this all in one round of layoffs. You know, they already went through this at the end of 2022. It's very unfortunate for optics, for the people who are impacted by this, that they had to go through a second round of layoffs. I can only imagine what the morale must feel like inside the company at a time like this. Now, one thing I do appreciate of this, though, is that he's saying it's a sickening feeling. I made the decisions that got us here, but it would be even worse to not make a change, because if business continues on in this way, it would not be ideal for anyone, employees, investors, or the company. So this is really the first time that I recall seeing Howie being apologetic in terms of the way he's approaching the media and the way that he's taking responsibility for this. So I feel like this is a step in the right direction. That being said, it still is an unfortunate and obviously difficult thing for all of us to experience. I have to imagine it's even worse for Howie going through this himself. Now, that being said, we do want to round out this article by mentioning that Howie is then saying we are realigning to go after those bigger use cases and therefore bigger deals. We want to get customers with that $1 million plus spend rate versus supporting lots of little $10,000 customers from a sales touch standpoint. So what does all of this mean? Well, this is something that we reported on back in December 2022 with the last round of layoffs. There was very similar messaging around this, in the sense that Airtable is calling out the fact that they are going for enterprise deals. They are not interested in sticking around and attending to the needs of the small and medium-sized business. Now, I want to pause, though, and say Airtable has done nothing to alienate those of its customers who fall in the small and medium range. They're simply reassigning their focus, and they have also altered their pricing scheme as of late as well. Now, this should be good news to all of us, because my personal opinion is that we all want to see Airtable succeed. As a consumer, I want Airtable to be a profitable company. If it is cash flow positive, if it is profitable, then I can rely on the fact that Airtable will continue to invest in itself, making its product better, faster, and stronger. But if Airtable is not profitable, if Airtable is suffering financially or in any other way, then your guess is as good as mine. So it actually benefits us all, especially as consumers, that Airtable makes these decisions and is in fact profitable. That being said, I've seen a lot of noise over the internet over the last week with people who are up in arms about these changes. People who are talking about shifting over to another platform, people who are saying that Airtable is not listening to the needs of the small to medium business, etc., etc. Now, it might be true that Airtable got to this size because of the fact that they had so many small businesses at their inception. Now, I go back to this idea that Airtable hasn't really alienated small to medium businesses in any way. Yes, they have changed their pricing recently, which has impacted many of us who are on their pro plan. But in a positive move, they also created an upgraded tier that did not previously exist. This upgraded tier, while it costs more, does give us the option to get more out of the software. Gives us that medium business advantage. So those of us who are on a small business plan, no problem, but now there's an upgraded tier that gives us more power with Airtable. So while I've listened to a lot of this chatter online just to get a temperature of the water, I'm honestly surprised that so many people are up in arms about what's going on over at Airtable. Listen, they're running a company in a very difficult time for a tech company. And so let's go ahead and shift over to exactly why this might be such a difficult time to run a tech company. Again, remember that this is not a financial channel and this is not financial advice. But if we were to look at financial data that's coming from the big tech company, the biggest perhaps of them all, Amazon, at the height of the pandemic around July 21, Amazon was trading around $185 a share. And taking us down to recently, we're looking at $138 a share. So this is down about 22%. And this is after a meteoric increase in 2023. As you can see, Amazon is up almost 60% from its start of 2023. But Amazon might not be the best comparison by itself, although it does kind of give us an indication of what might be happening in the tech sector. Let's flip over to Salesforce, perhaps a better comparison to Airtable in terms of the software. So here's Salesforce around the same time period, July 21, trading around $245 a share. They rose as high as $300 a share at the end of 21 and then plummeted to as low as $128, currently trading around $200. So if we're to compare the same time frame here, 245 July all the way to 200, Salesforce has almost rebounded, although not quite entirely. But here's why I don't think Salesforce is necessarily the best comparison. Their market cap is huge. The market cap on Salesforce, they're a much bigger company, $209 billion. So what happens if we're looking at smaller tech companies, maybe closer to the size of Airtable? This is Asana. Asana has a market cap of $4 billion, so smaller than Airtable's last valuation, but still maybe closer in terms of size. Well, they had a meteoric IPO. They came out the gate in 2020. They increased all the way to 137, and then they've fallen and flatlined basically the entire year of 2023. So they are down astronomical amounts from this height of 130 all the way down to $20 a share. Let's flip over and take a look at Zoom. Almost a similar thing here. IPO'd in 2019, meteoric rise all the way up to a height of 500. If we're looking at the same time frame here, they were trading around $390 a share, and they've flatlined through 2023 at $67, $68 a share. So what does this mean for how we might consider Airtable's current situation? Now, reminder, this is speculation because Airtable is a privately held company, but if they were valued at $11.7 billion back in 2021, well then, if they're anything like Zoom and Asana, they could be currently valued anywhere between like $3 and $5 billion. Their company valuation might have plummeted dramatically. It's really hard to say because of the fact that we don't have insight to their numbers, but we have to understand as consumers, it is an impossibly difficult time to be operating a tech company right now, especially after having raised a large sum of money as Airtable did during the height of the pandemic. Quite a lot of money went into Airtable's pockets, and now they're being called to task, and it's not an easy market to deliver in. So what is Airtable really trying to get to? Well, if we flip back into the article, they are saying that they are trying to get to be cash flow positive. And this, I'm really hopeful they're able to deliver on. If they are able to become cash flow positive, maybe their investors will breathe a little bit more easily and Airtable will be allowed to do what it does, and that is build an amazing software product and continue to innovate. Now, that being said, if all of this still leaves you feeling uneasy and you're not happy with the direction that things are going, I just want to remind you that there are other options out there. This is why we've been talking about other tools on this channel for the last year and a half. In fact, it was back in late 2022 when Airtable made their first layoff announcement that I was really grateful that we'd already found a second tool called SmartSuite. Because if Airtable is not able to continue to deliver for the small to medium business, well, I need another option as a business owner, and you probably do too. So the choice is yours. I don't necessarily think that this spells doom and gloom for Airtable, but before signing off, I do want to be conscious of the human element here. A lot of people lost their jobs, a lot of incredibly capable and smart people, many of whom we work with on a daily basis at Gap Consulting. And so to those people, I'm very, very sorry that you have to go through this, but there are other options out there for you if you want to stay inside of tech, or if you're interested in getting into consulting, please send me an email directly. I will be happy to connect with you and help you out if you have suffered from these layoffs. I know we covered a lot in this video and it's not our usual style, but I hope you enjoyed it just the same. If you have any questions or comments, please drop them below. And in the meantime, keep on building.